Stop the rhetoric and execute on your plan. Stop the rhetoric, all right? Stop the rhetoric and start executing to get the best deals to secure the best and lowest basis you can in your precious metals. Observe the world around you, observe the markets, take advantage of the current situation and set your plan. All right, there are two basic premises. People that are beginning to build their stacks and people that already have a stack. If we don't start every video trying to understand which group we fall into, then everything that follows is misleading. All right, so, when I say I have a stack, a significant stack, it's not to brag, it's to tell you that my strategies and my approach and my advice fits me. All right, and a lot of you as well that have been stacking for a while. Who cares how much money you have, right? I have a certain percentage of my money in silver and gold and a little bit in platinum. When I watch the market, I want to find the most opportune price. All right. If you come into silver at a $20 spot price, and then 3 months later it's trading at 15, how much have you lost? How much opportunity, assuming premiums stay the same, and you can always find a good deal if you're not too picky about the silver or gold that you purchase. But if silver goes to 15, you have diminished the basis of your stack by 25%, by increasing, not diminished, but you've increased the basis of your stack by 25%, which means that you have to go up something like 35 or something percent to get back to where you would have been had you not waited. Now, going back to the other group, where you're building your stack, I've said it over and over again that I have no problem if you don't have a stack yet with jumping into the market at the current levels to start building that stack. I wouldn't do it with high premium product, but that's fine if you're building a stack. But I'm really, when I give my predictions, I am really addressing people that already have a good basis in their stack and they're looking to make it better. And as I've said before, $20 silver, $20 spot plus a premium silver doesn't make my stack any better. I'm holding to my prediction that silver will see the 18 to 15 range. And recently I told you that gold was not safe. Well, of course it's safe in the long run. And of course, if you fall into the group that's just building your stack now, the prices have been good enough. But if you do have a stack, you want to, again, bring that basis down, and gold sold off, as you saw. So if you were buying gold $100 higher, now you can get it cheaper. All right, I just wanted to get that off my chest because people, they misunderstand, and I think 90% of YouTube videos don't start with the premise of where their advice, what group their advice is targeted to. The video that says, you keep on stacking, right? Everything's cheap. All right, that's all true, but can we go a level deeper? Can we actually try to get the best price on the metals that we buy? Well, how do you get the best price on the metals we buy? Well, for one thing, you watch the stock market. All right, it was only 2020. That was 2 years ago. I mean, hopefully we have an attention span that long where you saw gold and silver plummet. I think gold was maybe 14.50. Silver got down to $12. 2 years ago. So do you really think that silver can't get below 18 with the Dow sporting a two handle now? So what I've been predicting for some time is that the market would sell off, even in the face of the bear market rally we had recently, which would be this area here. A lot of people got back into the market, got long, and those people, some of those people are fixing to lose twice, right? Lose their initial investment, lose what they added to the market. And here we are busting old lows. All right, and the S&P is a little stronger than the Dow, and everything is in, pretty much crash mode at the moment. Maybe we'll have a Black Monday, I don't know, but I do know that this market is going down further, and you can't expect silver and gold, the most liquid commodities in the world, to be immune to market crashes. All right. I mean, and if you think the Dow is at a double bottom here, well, I mean, let's go 5 years. Okay, there we are, 5 years. I mean, where do you see the bottom in here? Do you see it right there? I guess possibly. Or do you see risk down to 25,000, down to 23,000, or down to, what is that, 19,000 or something, or 20,000? Clearly, there is plenty of risk in this market, and we are breaking lows, and fear and volatility is finally rising. I believe that there's even some lawsuits about people suppressing the VIX. So you watch the market, and you have to say, we are in a bear market. We're in a bear market, and we'll have rallies, but we'll also have declines. Let's go back to a 1 year. And then you have to say, are we going lower? And if we're going lower, will that drag silver and gold down with it? And I think that's very possible. And as I've also been saying, raise cash, raise cash, raise cash. Have you gotten out of Bitcoin yet? Do you see what's coming for Bitcoin? If you did nothing more from this video than sell some Bitcoin and buy some gold at this point in time, I think you're going to save half your money. All right, because Bitcoin is it's a submarine going lower, and you just want to get out of crypto at this point, guys. All right, but I know crypto bros don't follow me because I've never been a fan. But it's going lower. The general markets look to me like they're going lower, and we'll have to acknowledge that that could have an impact on precious metals. Let's just go ahead and grab a chart of gold. And here we have the gold chart. This is a 3-day chart. I really hate these charts, by the way. I don't know if anybody really enjoys these charts, but I really hate them. Here we are. We've got gold down around 1650. You know, I've been saying for a while, when it was $100 higher, that I think there's going to be a sell-off, right? And here we are at 1650. The GSR back in the gold-silver ratio back in the mid 80s, indicating that silver is still the buy, but it's not the extreme buy, or gold wasn't the extreme sell when the GSR was 95. At that 95 level, something's going to happen. Either silver's going to go up, or gold's going to go down, or possibly both. So I'm just going to focus on gold for a minute here at 1645. I think that is a smoking good price. But I'm going to say this, and I do, please don't take it wrong. I think we are in the buy range for gold, but I think that we have $100 of downside. I am perfectly fine with an estimate of 1550 on gold, and that's what I'm going to be executing on. But I think we're in the buy range right now, and in fact, I did buy some gold on Friday as the spot price was cratering. I thought I got a good deal at around 1679, I think, is what I paid per ounce for the gold I bought. No, it wasn't a gold eagle, and it wasn't a buffalo, wasn't even a maple. It was just a generic bar in assay, right? Which is what I love. And mind you, I'm not in one of those states that puts a 30-day hold on gold when you sell it to the dealer. I'm in a state where you can trade it easily, and when I get this gold, I'll show it to you when I do. I could walk into the LCS the next day and sell it at the same premium I just bought it at. So Low premium gold is fungible. You're not married to it. You're not hoping premiums, go up to keep your investment. So I like low premium gold, and that's what I purchased. I guess I ought to show you what I bought in case you want to buy some as well. But I think we are at the top end of the buy range in gold. And if we have a Black Monday or, 3 weeks from now, we have another significant downturn and gold falls deeper into this range, I'm going to buy some more. I really would like to build up my gold stack here. Silver, let's find silver really quickly. Hold on. Silver at 1882. Okay, so there is the silver chart. As I've been saying, don't get excited about 1880 silver. All right, we're still overpriced for this market. It's not that it's not a good long-term hold. It's not that it couldn't explode higher at some point, but we're in a recession, and the dollar is super strong. It's crashing economies around the world. Anyway, silver I'm not buying unless I find a collector piece that fits my profile for things that I can make a lot of money on down the road when spot recovers. 18 to 15 is still my buy zone for silver. I was really disheartened though to see premiums rising. All right, so right now with these abrupt move lower, I mean, I think it was like 80 cents in one day. 80 cents. I mean, that is crazy. If we get another 80 cents, on Monday, then we'll be back in my buy zone. But I don't like the higher premiums, and I don't like the stories again coming out of the U.S. Mint talking about planchet shortages and reduced production. Is it a rumor? Is it real? I tend to think it's real because the U.S. Mint seems to love to curtail production. Why that is, I guess I will leave that to another video. But they're setting up that dynamic again where Silver Eagle premiums and Gold Eagles will probably continue to stay high, and that will drag up the premiums on lower premium products. I saw Vermilion the other day, really good channel to buy and sell your precious metals, really honest and transparent pricing on the buy and sell side. They're paying 250 over for buffaloes, which is a sign of the times. That does tell you that the silver premiums are trying to edge up. Perhaps the dealers are losing money on these rapid drops. Perhaps there could be another rapid drop as I'm predicting. So unfortunately, the premiums are rising. But generally, we're back in this $2.50 premium area for kilos, and maybe $2 or a little more for 100-ounce bars. So that is not that's not conducive to my plan to buy cheap silver at a low premium. But you can always find something out there. If you're just stacking the weight, and this is what you ought to do right now, don't get married to something with really high premiums. So anyway, you saw the drop in silver. If you were buying up at $20, then it's cheaper today. But I do think we're headed at least $1 lower and possibly $4 lower by the time this market gets done crashing. Let me show you what I bought really quickly. Like I said, it was gold. All right, this is what I purchased yesterday. They have sold out, and even if they hadn't sold out, the price is higher. I believe I paid $1,731, which sounds high for a generic bar, but you have to take into account my credit card discount. And again, I'm gonna keep putting the link down there to the eBay credit card. You can buy from reputable dealers on eBay, get very fast shipping, and get your credit card rebate to boot. Let me show you what the price is on gold when you apply my credit card discount. So 1,731. I'm pretty sure that's what I paid. Times point, I believe it's 968. 8. There's like a 3.2% eBay credit card rebate once you've spent $1,000 for the year, which I have done. And check out what the price turns into, 16.75. All right, that was just whatever, $35 over spot when I bought this. As I've told you, I mentioned why I like generic bars. Now this is a random gold in assay, so I guess it could be RCM, could be a Valcambi, could be one of those cute rand bars. What else? Credit Suisse, or Perth Mint, or PAMP. Ooh, it'd be nice to get a PAMP bar. Asahi. So there's nothing dangerous in these images, as long as the holder is nice and it is, oopsie, as long as it's retail friendly. So that's what I did. I really like the idea of adding to gold right here. If that's something you need to do for your stack, I would hold off on silver. I would certainly hold off on silver. That's the same price today as it was 2 days ago, because the spot plummeted and the premiums increased. So stack your cash. Stack your cash. Get ready to buy when the time is right. Watch for the crashing stock market. You know all the reasons why the stock market is going down, right? I mean, Fed Chair Powell was very, very clear that he's going to continue to ramp up or hold on his tightening policy for now, right? And then, you saw, I hope you saw what the UK did, moving back to Reaganomics and slashing income taxes, which just plummeted the pound, which increased the dollar further. A long time ago, I said I thought the Dixie was going to 115. Where are we now? At 112, 111, 112, something like that. The United States, with its firm and hawkish grip on the dollar, is crashing the world. It is the world economies just are not going to survive this strong dollar. And ultimately, there will be some kind of reversal in the dollar, and ultimately, you'll see your precious metals increase. But right now, we are on the battleship US dollar, and every time it goes up, it fires a salvo into silver and gold. And that is what is happening, at least from what I can see in the paper markets. I see plenty of product out there, although premiums have been increasing. But if you're creative and you're adding to your stack at good prices, from reputable dealers, I think you can still take advantage of the dropping spot price. So one thing I wanted to do was show you gold in other currencies, and there is another reason why we need to see lower gold prices. And hold on one second, and I'll show you what that is. All right, here we are with the price of gold in the British pound. That would be the blue line. This is a 6-month spot chart. And look where gold is in the UK pound. It is sitting at all-time, or not all-time, but it is sitting at a 6-month high right now. Gold in other countries has been a phenomenal protection of their wealth. And what is happening in the U.S.? Well, the dollar is strong, and the price of gold in U.S. dollars is plummeting. But you can see what's going to happen here. At some time, there is going to be a reversal. And I don't know. All bets are off. I think if you're in a foreign country, I'm a U.S. YouTuber, but if you're in the UK, if you're in China, if you're in anywhere in South America, if you're in Japan, that gold is one of the only things protecting your wealth. And I just don't think the regulators on all sides of the world want to see gold spike to higher highs. It would just be it would send shockwaves throughout the world if gold gets some strength here. So I think that the powers that be want to see gold lower, and we're barely keeping it below 6-month highs in other currencies. Yes, the UK is falling apart. Okay, and one of the strongest economies. I won't even hit on Germany, where they're basically ceasing industrial production. You don't think recession is coming? You think a soft landing? You're hoping for stagflation? I don't think stagflation is the word. I think it is significant recession, possibly depression, is coming to the world. And you can see it in the price of gold in other currencies. But what do? They've got quantitative easing in the form of utility controls on the spiking cost of power. They are now dropping, the UK is dropping the tax rates in a Reaganomics-esque kind of a move that will drop tax receipts. And tax receipts in the United States will drop as well. So we have a similar scenario coming around in terms of our GDP, in terms of the world GDP. It's going to be dropping off a cliff, and major corporations are reducing their estimates as fast as they can, but not fast enough to properly reflect the stock market where it ought to be. So again, world crashing, currencies crashing, debt market spiking. There is no scenario here that doesn't say get your money into silver and gold, or at least start if you haven't done so yet. But nonetheless, look at the opportunity in the United States, and we have opportunities that other countries do not have. You go into the UK, you've got VAT tax and super high premiums, and they can't even buy abroad anymore. I mean, literally in the UK, the only smart way to stack is at flea markets. Right, buy old gold chains and stuff, and people giving away what they have, because retail is, in my opinion, not an option. I know a lot of big channels recommend bullion dealers, but you're really going to pay a 15% VAT tax on top of a high premium to begin with, on top of a weak currency. China, I mean, it's no surprise to me that China wants gold and their citizens want gold, because China's economy is really in for trouble, big trouble. And of course, in China, once you buy a stock, you can't sell it. Once you buy, an option on a new piece of property, you have to pay the mortgage, even though they never built the property. And if you don't, they line you up and shoot you. Right? In the UK as well as Canada, did you know that their home prices are not fixed to fixed rates? Do you know they reset in some cases every 3 years, in some cases every 1 year? What do you think a move from 0% interest up to 6% interest is going to do to the real estate market in other countries as the tax base drops? This is a worldwide catastrophe, and if you think that things aren't going to get much worse, I think you really ought to take another look at that and protect yourself and raise cash and lower your debt and get ready for cheaper prices in everything from automobiles. And I think, inflation is going to come down. I completely dispute the people that rant about higher and higher and higher inflation. There will be a time for that. There will be a time where we go full on banana republic. But right now they're trying to pull in the reins, and they're going to reduce inflation. And the price of goods and services are going to escalate at a lower level. But it's not going to happen fast enough to stop the Fed from breaking shit. So, I do think that the CPI, whether you trust it or like it or not, will be coming down. And I do think there will be a point where the Fed stops tightening. But I don't think that inflation at this moment in time is going from 8% to 10% to 16% to hyperinflation. There is a Grand Canyon in between where we are right now and where we're headed in a couple to 10 years. All right. Yes, in a couple to 10 years, everything is unsustainable. We'll be printing money just to pay the debt and paying the debt with printed money and giving money away to help people pay their bills and keep from, keep communism from, taking over in our country. But right now, between here and there is the Grand Canyon of the crashing global economy. And that is why you see gold doing this. That is why you will see silver begin to do this again, crashing, crashing, crashing. It's not necessarily an inflation story. It is a worldwide recession or depression story until something breaks so severely that they have to literally open the fire hose of money and steal everything you have in the bank, in your financial investments, in your pensions, in everything that you have that's tied to the US dollar. Once we get over the Grand Canyon, then they're coming for you in every way possible. But I do think we will still have better buying opportunities ahead. And I want to take advantage of that because I already have some silver and gold and I want to get better prices. So don't panic out. Don't FOMO. Don't think there isn't more time. There is time. Right now, we are in the part of the story where things get really, really bad, not the part of the story called hyperinflation. Wait for it. All right, that's all I have for right now. I hope that wasn't too long a diatribe. But, anyway, that's what I think for the week. Let's watch for a Black Monday. I love the two handle on the Dow. Where, oh, where are we are we going to buy? On the S&P, what was it? Morgan Stanley or Goldman Sachs or somebody at the beginning of the day, they said our new price target is 3,600 on the S&P, and by the end of the day, we were pretty much already there. I think we're going to see the S&P down around 3,200 in pretty short order here. Again, it is September and October, and nothing good happens in September, October. Anyway, I think you'll have lower entry points into the stock market if that's what you're looking for. I think you'll have lower entry points into Bitcoin if that's what you're looking for. I think you'll have lower entry points into silver and gold and platinum if that's what you're looking for. Okay, guys, what are your opinions? I hope you'll share them for the audience. We get a lot of great comments down below. I'd love to hear them, and I'll try to give my response. We'll go for there. If you want that eBay credit card, I'll put a link down below. You can take advantage of these bargain sales just like I am. Talk to you later.